Hi, this is Robert Kiyosaki, and you're listening to Capital Hacking. This is the most important thing you can listen to today.
He's the one.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella's story out of nowhere.
It's in the hole. That the only thing we have to fear is fear itself.
Capital Hacking begins in 3, 2, 1.
Welcome back to the big show, John Edwin. Always a pleasure to get on the microphone with you.
Yeah, always a pleasure to do this with you, Josh. Today we had Aaron Fragnito on, owner of People's Capital Investment Group. Awesome guy. Gave so much value, and he also leads with value by creating some educational tools for people to understand all about real estate.
Yep, and I think one of the things he taught today, if you haven't heard that expression, buy box, he did a great job with buy box, and he also echoed the fact that things have slowed in his world and all of the direct investing and value add multifamily, but no one has ever explained better why he chooses to invest in a blue state than this guy, Aaron. I mean, I think he did a pretty good job explaining why he chose to do that.
Fantastic job.
Yeah. So curious stuff here. You're going to love this episode.
Let's go.
Great to have Aaron Fragnito here, mostly because it's nice to say his name, Fragnito, right, John?
That is fun. Aaron, can you give our listeners a little background on who you are and what you're up to?
Sure, absolutely. Thanks for having me on the show, gentlemen. Glad to be here. I've been investing in real estate since 2010. I read the Purple Bible, Rich Dad, Poor Dad, and decided that I wanted to be a real estate investor. There's a couple problems. I had no money and no idea how to do it. So I moved out to Steamboat Springs, Colorado. I taught kids how to ski for 6 months. I read additional books on it, David Lendahl, Trump University, and they all explained how easy it was. You just raised a little bit of money, you found a great deal, you locked it up, and as we say here in Jersey, bada bing, bada boom, you had yourself great real estate investment opportunities. I moved back to Jersey and became a realtor. Actually, I made a list when I was in Colorado. I said, okay, in 10 years, I want to have a net worth of $1 million and I want to have $100,000 of passive income. That was my goal. So it was the top. I want to work my way down from that. So I got to get to know people, save up some money. So I'll become a realtor. So 2010, got my license as an agent. No one was buying houses. I made $500 in my first 6 months of being an agent. It was dismal, but I was forced to learn short sales and REOs and foreclosure properties, right? So I started working with a lot of investors, speaking at different real estate networking events, and just understanding distressed assets. It was really a godsend at the end of the day because I started to make a little money on short sales and like selling some assets like that, and also meeting the investors that would buy them. So started a real estate networking group called New Jersey Real Estate Network with about 5,000 members today. Went around to different REIAs and spoke and raised capital that way. Got into fixing and flipping properties, teamed up with the wrong partner. He stole a little money from me, hired the wrong contractors. I only lost about $7,000 in my first flip, which is a lot cheaper than a lot of the guru packages. So like actually, came out ahead. Then he learned how to do it the right way. I bought a 6-family with my business partner to today, Seth Martinez, who's an honest businessman who complements my weaknesses and vice versa. And we bought a 6-family for $220,000, put about $60,000 into it, leased it up, refinanced all our money back out in a year, and said, okay, we can do this. We can make this work, and kind of built from there. And now we have about 100 private investors, family offices, high net worth individuals. We developed a management company in 2015. That was very difficult. And we acquire 50 to 150 unit assets throughout New Jersey. And we've completed about 280 transactions over the last decade or so.
Nice. It's a nice track record. And so, if I might start, John, in the world of direct investing, like what you do, it seems like active investing, obviously for you and Seth, right? You guys actually run the deal.
Yeah.
What is your buy box, as they say? And what is a buy box? Can you teach our listeners?
Hey guys, it's John Vroman, founder of Front Row Dads, and you're listening to Capital Hacking, the best investment you'll make today.
Sure. A buy box is what you purchase, what you buy, right? And it makes sense. And it's so important to have, because if you ask an investor what they buy and they're like, oh, I buy everything, St. Louis, Philadelphia, New York, industrial, multifamily, you're like, so you buy nothing. You buy nothing. That's what you buy. Yeah. You have to have a buy box and you have to stick to it. And the best investors have a very strict buy box, and they say the word no a lot more than they say the word yes, because the word no never lost me any money. The word yes has lost me money. Right. So say the word no more often, be picky on what you buy, know what you are out there to acquire, and focus on getting that. Now, are there times you pivot your model a little bit? Sure. But you can't be one of those guys that's like, oh, I'm doing this now. I saw a good deal in Florida. I'm getting on an airplane, and just have a buy box. Ours is 50 to 150 units within a 1 hour or at most 90-minute commute into Manhattan on the Jersey side, multifamily or mixed use assets. And that's it. That's it. We don't buy industrial. We don't buy office. We don't buy medical space. We don't buy in Philadelphia, or anything like that. We stick to what we know, value add opportunity deals where rents are below market value, high vacancies, where we can get about a 15 to 20 IRR return on investment to our limited partners. And if it checks that box, then we'll go into deeper due diligence on the asset.
I like that. Very clear buy box. And when was the last transaction you did?
Last one was a 42 unit in Passaic, New Jersey. We bought in December of 2026.
Wait.
And we just...
Did you say 26?
Oh, 24. Sorry. I'm a year ahead.
It's his vision. He's a visionary.
He's living in the future. He's a time traveler.
I'm a time traveler. Yeah. That's how I do. So I just go ahead. I know the market. The trick is have a time machine. That's actually what it comes down to. I would just want Bitcoin. I would have just bought Bitcoin. I wouldn't even done real estate. Yeah.
So Aaron, great job on a really clear message, and a lot of things I want to ask about, John, but I want to pause because I'm sure I interrupted you. Is there a question you wanted to ask?
Yeah, just real quick. I was curious about Jersey because we have a lot of friends who are investors, and they've kind of moved out of the state. And I've never bought in Jersey, but because of like the landlord-tenant rule stuff. So can you walk us through that a little bit and why you focus in on Jersey?
Sure. So the hardest part about investing in Jersey is the landlord-tenant laws and how they differ from city to city. And what it comes down to is rent control. And we just recently actually updated our buy box to not buying properties that have rent control. Or if they do have rent control, it's like on a very limited number of units within the building. Like we're looking at 126 unit, where like 14 of the units have like rent controlled tenants, but when they move out, it's, 100% vacancy decontrolled, meaning they become non-rent controlled units. So we were looking at another building we were very close to purchasing that had full rent control within the building. And there was a recent group of politicians that moved in that were like socialist leaning, borderline communists, and like we're all about like really making very strict rules on landlords. And so we were just like, nah, we're going to pass on this because we kind of saw the way the tides were turning. So we did update our buy box, say, you know what, it's got to be very, very limited rent control. Can't do building-wide rent control. And that does limit our buy box a little bit, but it makes it much safer and likely for the project to succeed. So you have to know your markets because it's city by city that rent roll changes within these markets. So you can have really restrictive rent roll in one market, and you can have no rent roll right down the street in another city.
Great question, by the way, Jim.
So you really have to understand your different markets here in Jersey. Another thing is the insatiable demand for housing. So on the flip side of that, if you do find a good deal and you manage it well, you could do very well in Jersey. The hardest part is buying it for the right price. There's a lot of demand here to buy properties. There's a huge rental demand. There's a shortage of housing of over 3,000 units per year. We're not building them fast enough here in Jersey, and it is hard to develop. And that means that's an insurance policy that my property values are going to stay pretty darn strong. We're not going to do what happens in Phoenix or Dallas, Fort Worth, or Florida, where it's really easy to develop and it's really easy to oversaturate a market. That's very unlikely to happen in Jersey because it's really hard to develop here. There's a lot of red tape.
Sure.
And that means like the stuff comes up super slow. Most people don't even try. And that means like we're not going to oversaturate the market. So that's one silver lining of a blue state.
I think you've worked on that. You've honed that in. Do you actually have investors from outside of the state? Because that's probably the first question they always ask, right, John? So Aaron, what Do you have investors from outside the state of New Jersey?
So we do. We have investors from multiple states, but I would say most of our investors have some type of relationship to Jersey. Whether it's they grew up here, they worked here, they have family here, they went to school here, or maybe New York City, in general, they live in Manhattan or some of the boroughs. And they might live in Georgia now, or Florida, or Texas, or California. We do have investors all over the country, but most of them have some type of connection to Jersey in some way.
Great. No, I really love it. Now, John, I just have a question for a guy like this. I mean, you're in the space. A lot of our investors at Accountable Equity also do private deals themselves, like you do. And I just want to understand, because with our work, we buy larger scale projects that are, driven by hospitality revenues and great growth there. But in your space, which is a great buy box, can you teach me the difference between, I know there's a massive change in interest rates and change in the whole economy, but let's say a deal at your peak when you bought the most deals in a year, tell us what year that was. And today, when you're looking at a property, what are the major changes about how you underwrite it, how you perceive it, and what you want to get out of that project?
Hi, this is Melanie McCallan. Josh and I are just so grateful for the many investors who have already joined us at Accountable Equity. Accountable Equity is so much more than a capital group. It's really a community of accredited investors that want to learn and grow together. I just want to personally invite you, if you want to find out more about this type of investment and see if it's right for you and your family, please visit us at accountableequity.com.
Hey, it's Hal Elrod, author of The Miracle Morning, and you're listening to Capital Hacking. Enjoy.
Sure. So we did a lot of deals in like 2016 and 2017 because we would go to a sheriff sale auction and we would literally go there with $100,000 and certified checks in our pocket, and we would just buy deals. I mean, everything was being foreclosed on. It took a while to get to the chopping block. It was like all the stuff that was coming from like the 2008 to like 2012 collapse. So we would buy great deals. I remember, we would lock up a 2-family for $40,000 and flip the contract out for $100,000 2 weeks later and pocket the $60,000 in between. So we were wholesaling a lot of deals. We bought a lot of these. We still own them to today. And sometimes we buy them, fix them, and sell them as well, do fix and flips. So I think we did something like 60 deals in 2016. We made somewhere around like $100 million in wholesale fees in that year, and just a very successful year. And it was a gold mine, the sheriff sale auctions. In time, though, what we realized was that was starting to dry up then, 2018, 2019. A lot of people figured out about the auctions. It wasn't just us and like 2 other investors there. We'd be like, all right, your turn. Okay, our turn. All right, your turn. No, you don't do that. You're not supposed to do that. You're not supposed to do that. We didn't do that. So, that's everyone showed up at the auctions. Everyone and their mom started bidding on properties. And then it got really crazy and hectic, and the deals were no longer there. Everyone's overpaying for real estate.
Right.
So we started to, in 2018, learn syndication much better. We had bought and sold a 25 unit. We had syndicated with kind of friends and family. We're like, all right, we really got to figure out how to raise capital from strangers, how to crack this code of capital raising. And we went about that and focused on buying larger scale properties through real estate syndication. So that was 2018, our focus then. And, that meant we were doing less deals, kind of like quality over quantity. So we transitioned our model from wholesaling and fix and flipping a lot of smaller properties, small multi, single family, and land throughout northern New Jersey, to syndicating larger assets, generally 10 to 40 units to start, and kind of grew up from there. So now we do less deals, and then there was also a period of time where it was really hard to find a good deal, like 22, 23, and 24 as well, even, where rates were high, prices were high. I'm sorry, rates were low, but prices were crazy high. Cap rates were very compressed, meaning you're just paying a lot for the real estate. I was like 21, 22, 23, and then 23 rates start increasing, but prices took a while to drop. And it wasn't until like 24 where the prices really started to make sense. And really just now this year, finally, we're seeing great deal flow again. So it was very hard to find good deals. we would buy about 1 to 2 apartment buildings a year for the last 5 years or so.
No, I mean, I think it's great. And you talk, the one last thing I want you to share with the audience as we, kind of come here closer to the end, I wanted to learn a little bit about your network of education, right? Very wise to go about building your network through sharing what you're learning. How did that idea come to fruition? And tell us a little more about how you built such a large scale network.
Hey everybody, it's Robert Helms, host of the Real Estate Guys radio program. And when you're not listening to our show, make sure you're tuned to Capital Hacking. You're going to dig it.
Sure. So, we don't sell education or classes or anything like that. Everything is free on our website. We have ebooks and we do have in-person events like October 4th. We're walking investors through one of our properties, the one in Passaic, New Jersey, we recently purchased. We'll show them how we do the renovations, why we do the renovations, the playground we put in the backyard, how it used to be filled with trash and like furniture, and we cleaned it all out. Now it's a nice area of amenities for the tenants, and why we do that and what difference that makes for the tenants and for the investors as well. Kind of how the numbers work on these syndications, the whole strategy behind them. So we do investor walkthroughs of buildings. We do in-person networking events twice a year as well. Those are packed with investors and operators and realtors and lenders and all the service providers in the space. Great way to build your brand and your business. And I do a bi-weekly podcast, the Passive Cash Flow Podcasts. And we do monthly webinars, masterclasses that educate people on how to build and preserve their wealth in real estate. This next one's going to be called a Fund of Funds, how and why to create a fund of funds. I'm doing that in 2 days. So we offer a lot of content and value to our listeners and followers and investors, but we don't charge for any of it. I mean, I think it's $10 to get into our event, but that's the cost of the beer. You get a free beer token and dinner for $10. So it's pretty much a loss leader for us, And so that's it. We just give everything away for free because our main goal is to help people build their wealth, to raise capital on a large scale, acquire these assets. And people are only going to be comfortable investing in you and with you if they know that you know what you're doing. And the only way to show that is to be a thought leader in the space and to educate people and put out quality content that is, of value to them and can help them learn this somewhat complicated space and try to make it easy to digest and easy to understand. We do all that: masterclasses, podcasts, in-person events, networking, you name it. We're busy getting content out there in person and online. And that's what it takes to be a kind of a thought leader in the space. And that's what we try to be.
It's incredible. Aaron, thank you so much for all of this awesome information. It sounds like you really lead with value and take pride in that. Where can our listeners follow up with you? Where can they find you and potentially join you for one of these workshops?
Sure. So our website, peoplescapitalgroup.com, is the best place to connect with us. We have ebooks there. We have links to our events and so on, our masterclasses, our podcasts. Everything's at peoplescapitalgroup.com. You can even schedule a call with our client relations manager and learn more about the investment side of the business and those upcoming events. So that's peoplescapitalgroup.com.
Thanks, buddy.
Thank you.
Great job.
Damn straight. We just got we got to the end of another great show. And everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.